numbers, the CPI?
I think it was a bit of a tug-of-war between the numbers that we saw out domestically and what was happening offshore. And if we have a look at the market today, 11:30 a.m. was when those inflation numbers were released. We did see a fall in terms of the market, but going through the afternoon, there were a few things that were happening. First of all, yesterday in China, we saw a 255 billion yuan injection by the PBOC. And yesterday, we saw the benchmark money market yields easing. Today, we saw the same. And the Shanghai Composite actually up by 1.7%, so that helped our afternoon session. Also in the US futures actually started off this morning with some sharp losses, and that's because IBM, a key component of the Dow Jones Industrial Average, came out with earnings after the bell, and we saw the shares dropping 3%. So we actually saw the S&P 500 futures down 0.4% in the morning, but by the afternoon we'd seen a reversal, and they're actually up by 0.1% at the moment, so a positive impact. And not forgetting those IMF growth forecasts, which also came out overnight, with the US growth forecast being upgraded to 2.8% from 2.6%, the Eurozone to 1% from 0.9%, and of course, importantly for Australia, China to 7.5% from 7.3% previously. So a lot going on in terms of the market, and I think in the end, not a bad result for the Aussie share market, given where we were in the morning, down by just 0.2%.
Outlook for the trading in the banks?
I think we will continue to see the banks doing well. I just don't think we're going to see outperformance from the bank. And as an investor, I guess one of the things that you want to see is earnings momentum and positive growing earnings momentum. And really with the banks, we're seeing the opposite there. Last financial year, we saw growth of 8%. This financial year, the consensus is for growth of 6%. And next financial year, the growth is for 5%. We're still seeing the banks growing their profits, but you can see that we are paring back some of those growth numbers in terms of earnings. What you really want to see is the opposite, and that's we're seeing that opposite trend in areas like retail and in media. So looking at the cyclical sectors rather than those yield areas, but I guess with the banks, the currency may have come into it as well. We did see the Aussie dollar spiking after those CPI numbers, so maybe international investors a little bit more positive on the Aussie dollar and putting that money in the way of some of those yield plays like the banks.
Look, one of the other big stories today, Julia, was BHP Billiton coming out with its quarterly report card, production-wise, overshadowed really by some of the economic data releases we got. BHP Billiton shares in the end closing down just over 0.8%. A lot of people suggesting iron ore missed a little bit. Others seem rather pleased with the report card in general because BHP is a little bit more than just iron ore.
I don't think it was a big deal. The miss, it was a very tiny miss in terms of that quarterly number for the iron ore front. The number coming in at 48.9 million tonnes. The consensus was at 49.4 million tonnes. So that wasn't a huge miss, but there had been expectations growing that we could have seen an uplift to the full year forecast for iron ore, and we didn't see that come through today. And I think BHP Billiton's weakness is because of the fact that we had seen the shares up by 6% since that Rio Tinto production number came out last week, and saw outperformance in terms of that report and outperformance in terms of the share price. So there had been a growing expectation that we would see outperformance from BHP Billiton. We didn't see that today. The share's only down by 0.8%, so that wasn't a bad performance given that in both London as well as in New York, we did see the shares falling quite substantially. And in fact, Rio Tinto shares coming under a fair bit of pressure, down by more than 3% in both of those markets. So I think the iron ore plays under pressure, mostly because of what's happening in terms of the iron ore prices. We're seeing the iron ore prices at a 6-month low, and BHP shares, while down by 0.8%, a very solid result coming through today, and it was just a slight miss, nothing to be worried about.